Have you ever wondered why XRP's price can suddenly skyrocket or crash with little warning? Well, it's not just random. Big players in the market are pulling the strings behind the scenes. From huge investors to the company that created XRP itself, these major players have the power to influence XRP's price, trading volume, and overall market behavior. But how exactly do they do it? And what does it mean for you as an investor? In this video, we're going to expose the strategies these big players use and break down how they control the XRP market in ways most people never even notice. Stick around, because understanding this could change how you view your XRP investments. XRP is one of the most well-known cryptocurrencies, and for good reason. It's not just another digital coin, it's built to solve real-world problems. XRP powers Ripple's network, which aims to make cross-border payments faster and cheaper than traditional banking systems. The technology behind XRP is designed to be scalable, quick, and efficient, and that's exactly why it's attractive to big players. But it's not just Ripple's mission that draws attention. XRP's price volatility, large market cap, and role as a bridge currency in the financial system make it a prime target for institutional investors. Large financial firms, hedge funds, and even banks find XRP appealing because it offers potential for high returns due to its price fluctuations. In short, XRP isn't just a cryptocurrency. It's a tool that big players can leverage for massive profits. Because of these factors, XRP attracts not only retail investors, but also big players who hold significant amounts of the coin. And with that kind of control, they have the power to move the market in ways that ordinary investors can't always predict or understand. That's why it's so important to know how these major players operate and the impact they can have on XRP's price. When we talk about major players in the XRP market, there are a few key groups that hold the real power. First, let's look at institutional investors. These are hedge funds, venture capital firms, and big financial institutions that have billions of dollars to play with. They can make huge buys or sells that instantly affect the price of XRP. Because they have so much capital, even a single large trade can cause dramatic price movements, creating ripple effects, pun intended, throughout the market. Next up is Ripple, the company behind XRP. Ripple holds a large percentage of the total XRP supply, and that gives them a lot of influence. While Ripple's always said it's focused on building a global payments network, their massive holdings allow them to affect market conditions whenever they release or hold back XRP. For instance, Ripple has locked up a portion of its XRP in an escrow account. But once that XRP is unlocked, it can enter the market and potentially cause price swings, depending on how it's used or sold. So Ripple's decisions on how they manage their reserves can have a direct impact on XRP. And then there are the exchanges and market makers. Centralized exchanges like Binance, Coinbase, and Kraken play a huge role in XRP's price movements. They control the liquidity, that is, how easily XRP can be bought or sold without dramatically affecting the price. Market makers on these exchanges can use their influence to set the price within certain ranges or trigger large price movements by shifting liquidity in and out of the market. Because of the sheer volume of trading on these platforms, these players are able to influence XRP's price on a daily basis. All of these groups have a hand in shaping the XRP market, and when they work in concert, the impact on price can be massive. The combined power of institutional investors, Ripple itself, and the exchanges creates a market environment where a handful of players can often have a disproportionate effect on the price of XRP. This gives them a level of control that most individual investors don't have, which is important to understand if you're looking to navigate the market successfully. So how exactly do these major players manipulate XRP's price? The most obvious way is through whale movements, large buy or sell orders from big players who hold huge amounts of XRP. These whales can cause massive price fluctuations by simply moving large amounts of XRP in and out of the market. For example, when a major investor decides to buy a significant amount of XRP, it can instantly create a buying frenzy, pushing the price up. On the flip side, when they sell off large portions, it can lead to a sharp decline in the price. These kinds of moves are often so large that retail investors feel the effects, even if they're not directly involved in the transaction. Another tactic used by major players is liquidity control. The big exchanges and market makers hold a lot of the market's liquidity, meaning they can control how easily XRP can be bought or sold. By adjusting the supply of XRP available on their platforms, they can create artificial price stability or volatility. For instance, by pulling liquidity out of the market, they can make it harder for regular investors to buy XRP, which may cause the price to drop. Conversely, increasing liquidity could trigger more buying activity and push the price higher. These moves are often subtle, but can have a significant impact on XRP's price action over time. There's also something called pump and dump schemes, which can sometimes be at play, especially with less transparent markets. In this case, major players or coordinated groups may artificially inflate the price of XRP by spreading hype, creating news, or making large buy orders. As retail investors start to pile in, seeing the price rise, the big players sell off their holdings, cashing in on the inflated price while leaving smaller investors stuck with overpriced. This manipulation is illegal in traditional markets, but in the world of crypto, it can be harder to detect, especially with the relatively new regulatory landscape. These strategies aren't always easy to spot, but they're a significant part of how big players control the XRP market. Understanding these tactics can help you make smarter decisions and avoid falling into the trap set by those with the power to move markets. Whether it's whales making big trades or market makers controlling liquidity, the influence of these players is a key factor in shaping XRP's price. Now, let's talk about Ripple's role in all of this, because the company behind XRP has an enormous influence on the market. Ripple holds a huge chunk of the total supply of XRP, which is a big deal. In fact, Ripple's holdings have been a key factor in shaping XRP's price over the years. One of the most notable tools Ripple uses to control the supply of XRP is its escrow system. Ripple placed billions of XRP into an escrow account, which means they can't all flood the market at once. This system was designed to release a set amount of XRP every month, ensuring there's a steady, predictable supply and preventing the market from being flooded with too much XRP at any given time. This helps Ripple avoid the massive price crashes that might happen if they suddenly dumped huge amounts of XRP onto the market. However, when Ripple releases XRP from, especially if the release is larger than usual or if the market is already volatile. Beyond the escrow, Ripple's partnerships and business deals also have a big impact on the market. Ripple has established relationships with major financial institutions, banks, and payment providers across the world. When Ripple announces a new partnership or a deal with a big player in the financial space, it often leads to an increase in demand for XRP. These partnerships are designed to use XRP for real-time cross-border payments, which could drive the adoption of XRP in the global financial system. As a result, each new deal can push the price up as investors view Ripple's growing influence as a sign of long-term value. However, there's another layer to this: Ripple's occasional sales of XRP. While Ripple has mostly kept its sales under wraps, there have been times when it sold large amounts of XRP to institutional investors or used it for strategic partnerships. These sales can influence the market because they increase the supply of XRP, which might have a downward effect on the price, especially if investors perceive the sale as a sign that Ripple is looking to offload